NVIDIA is the king of the AI market. So whenever NVIDIA announces a partnership, you see that other stock rally dramatically. Now, one perfect example is this company called Navitas Semiconductor, ticker NVTS. In the past 6 months, the stock is up nearly 200%. So it has nearly 3x in 6 months thanks to a partnership with NVIDIA. Now, this morning, we actually heard of another company partnering with NVIDIA for similar things. Is this going to be the next multi-bagger? Let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first, NVIDIA pre-market is hovering near $180, so don't worry to all my NVIDIans. I don't even know if that's a name, but we're making it a name here. I will be dropping a video maybe within the next 4 to 5 hours explaining all the bullish sentiment happening on NVIDIA. We have some recent news with the EU deal and what it actually means for AI chips. We have recent news about the Chinese market, and we just have kind of overall excitement in the semiconductor and AI space. So stay tuned for those episodes. Now, on today's main topic, I want to talk about this company called Onsemi Nvidia Corporation, ticker ON. Now, this is a semiconductor company with a market cap of roughly $24.5 billion. Pre-market, the stock is up roughly 3.5% on the news that Onsemi collaborates with NVIDIA to accelerate transition to 800-volt DC power solutions for next-generation AI data centers. Now, this might seem a little bit familiar, and the main reason is we talked about Navitas at the beginning and the intro of this episode. This was one of the few companies that NVIDIA has selected for a partner about a month ago. So actually maybe a little bit longer. So on May 20th of 2025, so about 2 months ago, NVIDIA kind of was focusing on this next generation of AI factories by kind of focusing on this 800-volt high voltage DC architecture solution. So what they're pretty much trying to do is right now in the data center market, you have to convert very high voltage to very low voltage. Now, in the process of doing that, you need to have things like transformers, like UPS, and a lot of other things that make that power less efficient because you're transferring a lot of things to heat during kind of these transfer downs. So your efficiency of the power decreases dramatically. Now, what NVIDIA wants to do is it needs to find a way where you don't have to kind of step down all those voltages. And if you don't step down all those voltages, you don't lose a lot of that energy efficiency through heat. And that will alone help improve the efficiencies of data centers, right? So that's a very top level overview. I can go a lot more in depth into this, but I think that's probably the perfect thing, is just a way to make energy more efficient without stepping it down, and a way for these data centers to be these racks and data centers to be able to work on higher voltage systems. And they mentioned a lot of partners with this. They mentioned companies like Navitas, like MPFs, like Texas Instrument, like Lite-On. Now, and data center power systems like Schneider Electric, like Vertiv. Now, the only one that really saw some form of movements was Navitas. And Navitas' main reason is this is one of the smallest out of them. It was a market cap of less than $1 billion. And getting any type of announcement here with NVIDIA will guarantee some excitement from investors. And we saw kind of that stock nearly 2x, or nearly 3x, I mean, in such a short amount of time. Now, when this video came out in May, when this topic came out in May of 2025, I pretty similarly discussed that I believe there were going to be other companies to benefit from this in the future. This is a very competitive market, and NVIDIA doesn't want to have only a certain amount of players. They want to work with the whole supply chain. If it means that they're able to get more products, if they're able to innovate faster, it's whoever can meet that demand and whoever can meet with your innovation pace. So in a competitive space, you always have other players, and that's where Onsemi Nvidia comes in. Now, let me just say, Onsemi Nvidia, do I believe this is going to be a multi-bagger or see like 100% X? Due to this news? No. The main reason is this is a market cap of $24.5 billion. Kind of adding another $20 billion on news like this doesn't seem realistic. But I do believe it's going to bring more eyes to this company and kind of show the bullish sentiments behind Onsemi. And I'll talk a little bit about Onsemi right now, but here we can see Onsemi today announced it's working with NVIDIA to support the transition to 800 volts direct current power architectures, a transformative solution that is driving significant gains in efficiency, density, and sustainability for next generation AI data centers. Now, for those that are not familiar with Onsemi really works on power solutions. They kind of work on silicon carbide. We can see power management, gate drivers, AC, DC power, DC power conversions, and the list goes on and on. If we look at Onsemi Semiconductor stock, though, the stock has not done so well. In the past, from its 52-week high, the stock is down roughly 24%. Luckily, from those April lows, the stock is up nearly 100%, I believe, with these news. In the past 5 years, from its 5-year high, the stock is down roughly 44%. Now, the main reason is understanding this company's main solutions. We saw they are power solutions, but those power solutions are mainly used in the automotive business. We can see all these different types of products that are used in all the types of drivetrain throughout the whole drivetrain of the vehicle, be it an EV vehicle, be it a smart vehicle, or in general. And right now, the automotive market is weak. It's extremely weak. So for that reason, if we kind of pull up here, this is the trailing 12 months of total revenue. Actually, this is revenue quarterly. So revenue quarterly has taken a hit since those 2023 highs, right? We can see that revenue continue to decline. And like I mentioned, it is because of the weakness in the automotive space. Now, I've talked about Onsemi. I actually own Onsemi, but I've said the following. This is one that is going to really take some time, and it's going to most likely be quiet money for some time until the automotive market turns around, because that is its core business. But recently, we've also talked about some of the potential bullish case for this company. So the first thing is what we're seeing here, the power delivery from grid to processors in AI data centers. And Onsemi believes this is an expanding opportunity. And this is actually from their last earnings call where they talked about it. And we can kind of see this indication of the data center market growing. And in 2024, you kind of have your 40 kilowatts racks, and your overall market there is about $2,500 per rack. In 2025, you're hitting your 120 kilowatt racks, and that's just about $9,500 opportunity per rack there. And as you kind of grow into these massive racks that are expected to be 600 kilowatts to a megawatts per rack, this is where things are starting to get pretty crazy, where you can get some massive amount of dollars per rack, and that's expected to be in 2027 and beyond. And something that one of the reasons is kind of those 800 voltage solutions. So there is the opportunity here. The other opportunity that I believe for Onsemi is, like I mentioned, the automotive, the data center, but the robotic space. If the robotics industry really does take over pretty soon, a lot of the solutions that you use in an automobile can actually work in a robotic solution. The motor drives, the power, a lot of those power, step-down powers and step-up powers, the capacitors and all the image sensors, all the intelligence sensors that Onsemi works with. All those can somehow, not maybe a direct fit, but with some engineering, not much engineering, can transfer into the robotic space. And I do believe those three things get me pretty excited about Onsemi. Now, Onsemi does report earnings on August 4th, so pretty interesting because that's the same day. I believe that's the same day Navitas is going to report their earnings. I don't know if I have Navitas earnings here. Yes, so Navitas is actually reporting earnings on Monday 4th as well. So both players in the power supply space are going to report in this upcoming Monday. Now, Navitas stock is down a little bit on this news. I wonder if the market is seeing this as a competition. The competition is obviously Onsemi. I still believe Navitas can actually be a multi-bagger. I've talked about this. If this does play true, in the live streams, if this does play true, the growth of this power solution, I think Navitas, with a $1.5 billion market cap, could be a multi-bagger. It has the risk, and there is a lot of competition, like we see with Onsemi Semiconductor. Navitas is one that If it pulls back, I'll be adding to this position. I'll be buying Navitas for sure. Onsemi is another one. Onsemi is a bigger stock though. Onsemi is a lot bigger stock. This is one that I don't mind adding here, but I think because it is a bigger player, it's going to take some time. But one thing that we keep hearing in the AI semiconductor market right now is power solutions are a big crucial bottleneck right now. So I actually am looking at a lot of power solution companies that I would like to add that maybe might not be doing good right now, but could benefit dramatically in a year or 2 years time frame as we continue to innovate in this power solution space. So that's the thing. I just want to kind of showcase maybe a little bit more charts here from fiscal.ai. Make sure to check out fiscal.ai/Jose for a special offer. This is a platform I use on a daily basis. So total revenue, we can see on a quarterly basis, has dropped down for Onsemi. Now, this is a company that even with bad revenue, they were able to maintain positive net income, except last quarter. But something did happen last quarter that investors should be familiar with. Last quarter, the company did make an acquisition and they are buying more solutions to improve their core products of silicon carbide. And I think that's actually very, very bullish. So last quarter, not necessarily the worst thing, especially when you look at this company's balance sheet, right? Their balance sheet, they do have about $3 billion in cash and about $3.3 billion in total debt, but they are still super positive in free cash flow. $1.4 billion in free cash flow in the last trailing 12 months. They actually also do buy a lot of shares. So to me, financially, this is a company that will be able to withstand any downturn, and any growth opportunity from here will just create a massive tailwind to help improve this company's overall valuation. And talking about valuation, maybe let's look at valuations really quickly to see how this company is doing. So we're going to look here for I think we go here to ratios. We're going to go to not trailing valuations, but we want to look at forward valuations, forward PE. And we can see this one's trading a lot more expensive right now, forward PE of 24.5. But this is when you start to think, why is the forward PE so high? The reason being is I think the market and analysts are underestimating the expectations of Onsemi. Obviously, the automotive market is weak for now, but what if those markets turn around? What if these power solutions become a big deal? This forward PE ratio will be a lot higher. So Onsemi, like I mentioned, these power solutions come with some risk at the moment, but I do believe there is some growth opportunity with at least some of these players where instead of just investing in one, I think I want to do a nice basket ETF approach on a lot of these random power solutions that I find. I kind of found a few last night that I might do a video on later this week. And another thing is, NVIDIA recently kind of talked a little bit about how they are transforming a steady power for AI with the NVL 72GB300. I might go a little bit more techie in something like this. They provide some great charts to kind of understand what they're trying to do, but maybe I'll save that for another video where I talk about some of those other companies that might benefit from this power solution as well. So I hope you guys enjoyed today's episode. Like I mentioned first, NVIDIA video coming out in a few hours. Navitas, I can see why the stock is down 1.4% on this Semiconductor partnership. Is it a competition? For sure, but with the type of demand that NVIDIA has, there's definitely room for a lot of players. And Navitas being a $1.6 billion company, there's definitely still room for opportunity for here to grow. With the stock kind of growing almost 100 and some 200%, 150% year to date, it comes with some risk. On Semiconductor, I talked about their various growth opportunities for the next 5 years that I do believe in. It could be a great long-term winner. In the short term, it could be very volatile. But I do believe this partnership with NVIDIA could help kind of transform and bring more eyes to this very strong power solution company. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.